The live stock price for ASML Holding NV on the Euronext Amsterdam is currently $1,220.80 which represents an intraday increase of 0.26% as of this afternoon, January 28, 2026. This movement comes on the heels of a massive earnings release that has sent ripples through the entire semiconductor sector. While the headline figure shows a modest gain in today's session, the underlying data suggests a much more aggressive shift in investor sentiment. Just moments ago, ASML confirmed that its fourth quarter bookings reached a staggering €13.2 billion, a figure that effectively doubles what most analysts in the industry were expecting. This is the kind of detail that creates a significant curiosity loop for anyone looking at their individual brokerage account today. While the market often focuses on the immediate price action, the real story is found in the massive backlog that now sits at nearly €39 billion. This record-breaking order intake is a loud signal that the demand for the most advanced chips is not just steady, it is accelerating at a rate that is catching even the most optimistic traders off guard. The expectation in the market over the last few months was that 2025 would be a transition year, a quiet year before a potential ramp-up in 2026. Many people using investing sites and platforms like Robinhood or SoFi Invest were braced for a slowdown in capital expenditure from the big chip makers. The reality, however, is that the industry is skipping the transition and moving straight into a high-growth phase. ASML just raised its 2026 revenue guidance to a range of €34 billion to €39 billion. When you compare this to the previous year's performance, it becomes clear that the gap between what the market expected and what is actually happening on the ground is widening. If you are looking for investment help or trying to understand why Nvidia stock and Apple stock are reacting so strongly to a Dutch equipment maker's report, this is the answer. ASML is the sole provider of the machines needed to make the chips that power the next generation of artificial intelligence and mobile devices. The trading volume today has been heavy, reflecting intense institutional activity. We are seeing large blocks of shares moving as major funds like Fidelity and those managed through Fidelity Wealth Management or Fidelity IRAs rebalance their positions. The sheer scale of the bookings, particularly for the extreme ultraviolet or EUV systems, has forced a rethink of the entire semiconductor cycle. Of that €13.2 billion in new orders, over €7.4 billion came specifically from EUV machines. These are the tools that cost hundreds of millions of dollars apiece and are used by companies like TSMC and Intel to produce the most advanced logic and memory chips. When you see this level of commitment from the big foundries, it tells you that the long-term outlook for self-investing and online investing in the tech sector remains incredibly robust despite the noise of interest rate hikes or geopolitical tensions. Speaking of geopolitics, one of the most interesting parts of this report is the shift in revenue geography. For a long time, China was a massive part of the story, making up over 40% of sales in some quarters. In the latest figures, China accounted for 36% of Q4 sales, but the company is forecasting that this will drop to around 20% in 2026. This is largely due to the export restrictions that have dominated the news. However, instead of this being a drag on the stock, the market is viewing it as a sign of strength. The fact that ASML can lose a significant portion of its Chinese business and still post record bookings and raise its guidance means that demand from the rest of the world, especially for AI-related infrastructure in the US and South Korea, is more than making up the difference. This is a crucial point for anyone using interactive brokers or looking for investment opportunities in the global supply chain. The resilience of the order book in the face of these restrictions is a testament to the company's monopoly on high-end lithography. Let's talk about the technical side for a moment because it is the engine behind these numbers. ASML is now recognizing revenue on its first high-NA EUV systems. These are the even more advanced versions of their current machines, capable of printing even smaller features on silicon. Two of these systems were recognized in the Q4 revenue, marking a major milestone in the company's technology roadmap. For investors who use the Fidelity mobile app or the Robinhood app to track their portfolios, this represents the next leg of growth. As chipmakers move to 2 nanometer and below, they have no choice but to buy these high-NA machines. This creates a powerful lock-in effect. While some might worry about the high price tag of these systems, the efficiency gains they offer to the likes of Samsung and Intel make them a necessity rather than a luxury. If you are currently holding any shares of semiconductor companies or are planning to buy soon, please comment below how many shares of ASML you currently hold, or if you think the shift away from the China market will eventually hurt their bottom line. It is a debate that is happening in every individual brokerage office right now. The move towards localizing chip production in the US and Europe, supported by various CHIPS Acts, is a tailwind for ASML because it means more factories are being built, and every new factory needs lithography equipment. Beyond the hardware, the company's business model includes a massive service and upgrade component, which they call installed base management. This segment brought in over €2 billion this quarter alone. As more machines are deployed worldwide, this recurring revenue stream grows, providing a safety net even during periods when new machine orders might fluctuate. This is the kind of stability that appeals to those using Schwab Intelligent Portfolios or SoFi Robo-Advisor services. It's not just about selling a big machine once, it's about maintaining and upgrading that machine for the next 20 years. This service revenue grew by 26% year over year, which is a detail that often gets overlooked in the excitement over the multi-billion-dollar EUV sales. When we look at the financial health of the company, the numbers are equally impressive. They ended the year with over €13 billion in cash and equivalents. This has allowed them to announce a new €12 billion share buyback program that will run through 2028. For a retail investor using Robinhood investments or SoFi stocks, a massive buyback like this is a clear sign of management's confidence. They are also increasing their dividend by 17%, which is another way they are returning value to shareholders. It is rare to see a company that is both a massive growth engine and a consistent returner of capital, but ASML seems to be hitting both notes simultaneously right now. Now, let's step back and look at what ASML actually does for those who might be new to the name while using investing sites to research. ASML doesn't make chips themselves. They make the lithography machines that use light to print the patterns of integrated circuits onto silicon wafers. Think of it as a highly advanced slide projector, but instead of projecting a photo on a wall, it's projecting a complex circuit design onto a piece of silicon with nanometer precision. Without these machines, the progress in computing power that we have seen over the last decades would simply stop. This is why the company is often described as the most important firm you've never heard of. Their dominance is so complete that they have nearly 90% market share in the overall lithography market and a 100% monopoly in the EUV segment. Looking at the broader market context, the performance of ASML is often a leading indicator for what is going to happen with Nvidia stock or Tesla stock. If ASML is seeing record orders, it means their customers are preparing for a massive increase in production. This often precedes a rally in the broader tech sector. For those who prefer self-investing through an individual brokerage, keeping an eye on ASML's backlog is like having a crystal ball for the semiconductor industry. The current backlog of €38.8 billion provides visibility for nearly a year and a half of revenue. This reduces the risk for long-term holders and is one reason why the stock often carries a premium valuation compared to its peers. The institutional ownership of ASML is another layer of the story that deserves attention. We see heavy participation from Fidelity Investments and their various vehicles, including Fidelity ETFs and Fidelity mutual funds. These large institutions provide a floor for the stock price as they tend to hold through shorter-term volatility. If you are using an online investment platform, you are essentially riding alongside some of the biggest and most sophisticated investors in the world. The fact that these institutions are maintaining or increasing their positions after this report says a lot about the perceived durability of the current cycle. As we move towards the future outlook, there are several catalysts to keep on your radar. The transition to high-NA EUV is the biggest one, as companies like Intel and TSMC race to be the first to mass-produce 1.4 nanometer chips. The demand for these machines will only increase. There is also the growing importance of the memory market. With the rise of high-bandwidth memory, or HBM, which is used in AI accelerators, memory makers like SK Hynix and Samsung are becoming even more important customers for ASML. This diversifies their revenue away from just logic chips and provides another pillar of growth. However, it is not all smooth sailing. The risks are real and should be considered by anyone looking at online investing. The primary risk